L'Espresso. Hello to all our listeners. For this new talk show, we are pleased to welcome Olivier Bouillaud, Head of Group Financing, Treasury and Tax at Albéa, to discuss bank relationships, cash management tenders, asset-based lending, and factoring. You can participate and ask your question to our guest by using the question tab located on the GoToWebinar console on your screen. We will try to answer them live or after the show via email. Everything that will be said over the next 20 minutes is based on a true story. This story is one of a breakup when packaging specialist Albéa tried to change its relationships with its banking partner in the United States. He understood that it would not be possible and took action to completely redesign the local organization of its financing and treasury operation. My name is Emmanuel Lecher, and I am pleased to welcome for this new edition of L'Espresso my guests Olivier Bouillaud from Albéa Group and Constance Véron from Redbridge. Hello, Olivier. Hello, Constance.
Good day to you, Emmanuel. Good day to you, Constance, and to all the listeners.
Hello, good afternoon.
Olivier, maybe let's start our coffee break with a small introduction on Albéa Group. What is your company doing?
Albéa manufactures everyday packaging and beauty solutions, tubes, lipsticks, mascaras, perfume caps, applicators, and several kinds of packaging and much more. We do serve beauty personal care, prestigious firms, emerging brands, and both local and international companies. Our group employs more than 10,000 people across 31 industrial sites in 13 countries in Europe, North America, China, India, and Indonesia. Our annual sales for year 2020 amount 1.1 billion USD equivalent.
Well, it looks like a nice business. What's the story of the group Albéa?
Emmanuel, the story of Albéa began with Péchiné Plastic, which then became Alcan before our buyout in 2010 by Sun Capital Partners, and then in 2018 by PAI Partners. Over this time, we have made a number of structural acquisitions that have furthered our organic growth, notably the acquisition of Rexam Packaging in 2012, which helped accelerate our development in the US and France, and then later on of Orcard in Canada and Fasten in the Netherlands in 2019. In June 2020, we made a substantial disposal of our dispensing business to Silgan Group, including our Brazilian business and a small business in China. We are still working on potential acquisitions for 2021 for both developing some product lines and geographies.
And how is the finance and treasury function organized at Albéa?
The finance treasury function is organized around a 3-person central treasury team in Paris, which relies on local relays in Europe, India, China, Indonesia, and in the US. This setup means there is centralization without hierarchical relationship. Each financial director has a certain level of autonomy and the ability to consult local banks. We are keen to retain this entrepreneurial spirit and enable our local finance directors to evolve freely within a defined framework and share processes. It's an organization based on trust, mutual recognition, and appreciation, and it works well.
Well, and which role plays the central treasury?
The central treasury department plays a supporting role by providing knowledge and experience. We help everyone to carry out the reporting that is crucial for our executive management and shareholder in order to monitor activity. We provide tools too, since we have developed and deployed a treasury management system for the group. Treasury processes between countries and business lines are more secure and homogeneous.
Thank you, Olivier. I think it's pretty clear. Can you now describe your financing structure and your financing strategy?
In terms of financing, the group's medium to long-term debt via term loans and a revolving credit facility is centralized in our holdings in Luxembourg. Our priority is to fund the working capital and capex needs of our subsidiaries. To that end, we have 4 cash pooling schemes, one in Europe, in the US, in China, and Indonesia. We do have a factoring program in Europe. Until recently, we also had an asset-based lending scheme in the US. In China, our factoring program is dormant because our subsidiary's treasury is in surplus.
Mhm.
Financing working capital needs enable us to eliminate the discrepancies between our receipts and disbursements, and ultimately to better manage inventory. This is essential for our businesses.
And maybe you could tell to our listeners what principles guide your banking relationships.
Indeed, we seek to establish stable long-term relationships with our banking partners capable of providing quality cash management services in line with our local needs. We do have 5 core banks with global capabilities, but we are working still with too many banks around the world, around 30 in total. Our bank account structure could be simplified so that we can spend less time reconciling, minimize operational and fraud risk, and free up times of our people for projects with higher added value. The ideal target would be to have 2 local banks and 1 international bank in every major geographical area in which we operate. It's a long way to go. The adoption of our treasury system has led us to streamline our banking environment with the aim of limiting the multiplication of contracts, licenses, and implementation on one hand, and concentrating our side business on the other.
So, if we go to the story of the day, what challenges did your recent cash management tender in the United States involve?
In the US, where we make a quarter of our turnover, we only had 1 bank. The relationship had existed for a decade or so. We were quite satisfied with the quality of the cash management services, even if it was very expensive. But the relationship had become stained with respect to the functioning of our ABL, mainly due to the monolith design, very heavy to operate. This collateralized financing, worth some 60 million USD, had many constraints, do's and don'ts, requiring the US banking partner to agree to our development strategy. We felt like we had a bank whose team from time to time failed to understand our concern, a bank on our board of directors.
Wow. So you felt a bit trapped. What were your options to escape this situation?
Emmanuel, the only way was repaying the ABL, remove all our obligation to the US banking partner, and facilitate our M&A operations. As such, we repaid the debt, paid the breakup fees, and put intercompany financing in place. This, in turn, triggered the immediate sending of a termination letter from our bank. We had 120 days in which we had to leave the relationship with our bank. At the end, we did obtain additional 60 days from them, leaving us some room for maneuver. The priority was to notify our clients and launch the process of selecting a new banking partner for the next 10 years or so.
And on what criteria did you select your new cash management partner?
We had a preference for a US partner that was fully compatible with our banking communication tool and TMS. We were also looking for a bank recognized by our clients and suppliers. We wanted a partner able to deliver a high quality of services, as our former cash management bank and at a fair price, able to set up letters of credit, guarantees, leasing, financing beyond factoring, and provide the broadest possible portfolio of services.
And for this selection, I mean, it's pretty hard because you only had 120 days to find a new banking partner. You called Redbridge. And Constance, which is here with us today from Houston, supervised your tender. Constance, maybe can you briefly explain the choices that were made with Albéa to match the deadline?
Yes, definitely. As Albéa only had a unique banking partner in the US, we needed to find one or two new partners able to address all their needs and constraints in terms of cash management and financing. We built their specification in project mode and invited US banks, international banks, as well as lenders to the RFP. The tender was designed to include both cash management and financing, but prioritize essential matters, as Olivier said, lockboxes, letter of credits, treasury tool capability, Forex, and digital check solutions. While Redbridge already assisted Albéa in their TMS selection, we were familiar with their treasury operation, and it made the difference to complete the project within the limited time frame we discussed. We work closely with the banks to find the best solution and services for Albéa, as well as competitive pricing at the same time, of course. And less than 3 months after the beginning of the project, Albéa found a new US banking partner for their cash management operations. After the review of all the financing offers received, none of the banks or lenders met during the RFP process offered Albéa a factoring program. Instead, most banks were proposing a new ABL program or a non-committed or too restrictive program for Albéa. So they finally selected a factoring program with one of the group's partner in Europe that met all the requirements of the financial department.
Thank you, Constance. We'll come later on the factoring program. We'll talk later about it. But Olivier, when you had all those banks who answered the RFP, finally, how did you make your decision?
A cash management decision to quit our historical bank in the United States was made end of May 2020, and the selection of our new US banking partner was made early September after a tender bid. We were surprised by Redbridge's ability to put us in contact with banks that we would never have dreamt of. The tender allowed us to reach a wide range of banks beyond our usual pool. Given the specificity of the banking services used by our American subsidiaries as described by Constance, the choice of our European bank was not necessarily the wisest one. Also, for our American clients, it was easier to adopt an American bank. Furthermore, we have found that American bankers were very flexible. To give you an illustration, our new banking partner offers the possibility of grouping several legal entities located in different location, in a single bank account. This might have been more complicated to obtain this from another non-US partner. Our collaborative approach within the central treasury and our US facility facilitated the final decision. We got our US subsidiaries on board before proposing the final choice to Albéa's CFO, and there was no hesitation in our selection. Moreover, while the priority was to change banks, we achieved the savings that was envisaged 2 years ago when we were looking into this matter.
And how has the migration to your new bank taken place?
All tranches were deployed gradually, from the bank opening to electronic checks by the end of March 2021. Once the accounts were open, we first circulated the information to our clients, and then we called each of them to let them know about the change of bank, Fortunately, we had a strong relationship with our US customers portfolio, and then we issued our first payments. Apart from electronic checks, which were not yet fully prepared for, we have re-established the full range of bank services, enabling us in the US to operate as normal. During the setup, we did use a new bank's in-house platform, and the connection to our Treasury tool took place at the end of year 2020.
What are the key learnings from that migration?
Our US banking partner installed a project team to build our new relationship and ensure a smooth migration. Several participants from various teams from the bank were invited. Each had a defined scope of intervention. Reports were used every week to structure the progress, points of doubt, possible delays. Albéa's customers in the US were our priority. The anti-fraud procedures tend to slow down a bit considerably the update of bank data at our customers. These processes require 2 or even 3 confirmations. The other priority was to honor our payments. We had the option to send manual payment directly on the bank platform, but this was a short-term solution, so we prioritized the connection to our ERP in order to send electronic payments. The massive use of checks in the US was a challenge too. This type of payment is essential for an efficient business in the US. We focused on the issuance of secure checks and set up a lockbox for collections.
But you mentioned at the beginning of your story this ABL program, which created a problem with your bank initially and with your former US bank. How have you replaced your ABL program?
After the sale of several assets in the US in June 2020, the introduction of new financing was not longer an urgent matter. Our US subsidiaries have no debt, and proceeds from sales remove short-term treasury requirements. The ABL provides an important financing base on invoices and inventory, which were no longer needed as much as previously. Given the funding envelope required for the next 3 years in the US, we so decided to break away from the legal, organizational, structuring, and lien constraint of the ABL, guarantees, cross-guarantees, obligors. This would enable us to avoid the hassles we had when dealing with our former banking partner.
And what did you choose instead?
We have naturally switched to factoring, which is a lighter, a simpler solution that is not expensive too. This new funding is confirmed for 3 years, like our European program. From the point of view of the rating agency, it's a very stable resource. Finally, in the US, factoring is seen as true sales, non-recourse, and thus deconsolidating, which is an additional advantage for us. We had conducted a RFP, but not found a partner that really met our needs. But during a conversation with a French factor, we learned that it was possible to extend the geographic scope of our European factoring program to the US. And in addition, this program had the advantage of being deconsolidating and offered much better terms and conditions than securitization solutions.
And is your new factoring program now operational in the US?
As of today, we did close an off-balance sheet factoring, self-insured via the bank, for $40 million USD, allowing our US entities to get their committed facility with an April 2024 maturity. Factory did start end of March 2021 with the first entity, and all of the rest was closed by the end of April. Insurance optimization was finalized by July 2021. It comes on top of our pan-European factoring program for 115 million euro for our French, German, Italian, UK, and Polish entities. In order to extend the factoring program in the US, it had to be adapted to the American necessities for financing and deconsolidation. The difficulty with the factoring program is never the launch. The difficulty is the ramp up, and the sustainability of our processes in order to ensure that the factor has a quality portfolio and therefore optimal financing conditions.
Can you tell us more about your financing partner?
Yes, we selected for the US factoring program the factor we already operated, our pan-European program. This factor provides a tool compatible with the functioning of our TMS. True sales involve additional legal costs, but overall, the cost of our financial resource in the US has fallen considerably compared to the pre-existing ABL. A slight downside is the financing will only be credited day plus one instead of same-day value in Europe. Also, the operating mode of the factoring program is not the same in the US as in Europe. The good relationship with our factor and his knowledge of our type of clientele made the delegated insurance program run smoothly. Without this intuitive personnel with our factor, we would not have been operational as quickly as we were.
Finally, what did Redbridge bring to this assignment?
Having a bank that provides both cash management services and financings represents a high operational risk for Albéa. The breakup was risky, but Redbridge helped us to keep our cool. The team provided a well-established roadmap, so we didn't lose our way and got to the point. Thanks to Redbridge, we have met the deadline. The consultants put a lot of pressure to collect detailed answers from the banks and provided a framework to facilitate the comparison between the different offers. Also, Redbridge provided a clear overview of the tender, stressed on the sensitive points, and foresaw the negotiation to come. The discussion paved the way for an easy selection of our new cash management and financing partner in the US.
And what are Albéa's treasury plans now?
There are always a lot of projects on the go to finish optimizing our treasury architecture with our TMS, to continue aligning our internal signatory processes and operating methods, to train subsidiaries that fall within our TMS, and to activate the new modules of our treasury tools, such as netting, cash forecasting, cash pooling, debt management. We will also intend to prepare as best as possible for M&A operation in the near future by starting to reflect on our debt structure and the positioning of our credit profile, credit insurers and rating agencies.
Mm-hmm.
The adoption of our new TMS comes with the requirement to rationalize the number of our banks. This constraint has become a change for the group. It allows us to deepen relationship with our key banks and achieve optimized, homogeneous cost and quality services.
Olivier, Constance, I wanted to extend a big thank you. Olivier, I understand from your story that it's possible to change bank for the best. Albéa's treasury department reinvented somehow the way it operates in the US. You made some economies on the financing side with your new factoring program, but you also made economies on your bank fees. And also you have found a banking partner, which I've noted that you would never have dreamed of. I don't see many questions. There's one from the floor. A listener is asking if your new cash management bank in the US participates in the group financing now.
Thank you, Emmanuel. As of today, no. We did have discussions recently and they have appetite to join our term loans, or should we have any room for maneuver in the revolving facility, they are ready to join, but as of today, nothing yet.
Okay. Well, thank you very much. Now is the time to go back to our desk. Thank you again for your participation and attendance. and let's reunite soon for a new talk show of l'Espresso. Constance, Olivier, à bientôt. See you.
Thank you, Emmanuel, for having us.
Bye-bye.
Bye-bye.
Bye.